Good morning and welcome to the World First Weekly Report. Well, this week is very much a tale of the inflationary pressures. During 2009 and 2010, the Reserve Bank definitely provided undercurrents that pushed the Aussie higher due to inflation. The RBA this week, however, has changed its tone. The RBA Governor Glenn Stevens noted that there's less acute pressure on inflation, and this has really pushed back interest rate hike expectations to the third and fourth quarters of this year. Last week, Governor Stevens noted that we're ahead of the game, which is where you want to be, and that's the thing that affords you periods of sitting, waiting and watching. This is definitely a marked improvement from previous rhetoric from the RBA, and definitely reflects less pressure on the Aussie dollar to go higher. China is still very much the panda in the room, however, and we'll be watching the terms of trade to get a bit of a sentiment of whether the Aussie will push too much higher in the next 3 to 4 months. In the UK, again, the inflationary pressures were key. Bank of England Governor Mervyn King has often noted that there's less inflationary pressure for the UK. However, this week's CPI figure of 4% is double their target of 2%. This is obviously going to put pressure on them to hike interest rates, and we may see a rate hike in either March or April this year. Japan has also had a poor figure of GDP this week. Over the last couple of months, we've seen people using the Japanese yen as a way to go about the carry trade. This is whereby traders borrow in Japanese yen at their very low interest rates of 0.1%, and they invest it in growth stories like Australia's mining boom. This is why we've seen the Aussie yen rally about 3% over the last 3 weeks, and we're now tracking above the 83 levels. If you'd like an update on the market, or if you'd like to book a trade, don't hesitate to get in touch. Enjoy your day.